Welcome to Real Estate Pro Tips. The topic is how to buy your next home before you sell your current home. I'm Pete Sabine.
And I'm Leslie Whitney. We are realtors with Compass in the San Francisco Bay Area.
We are here today with Mark Humph. Mark is the broker and president of Pacific Private Money, one of the fastest growing private lenders in Northern California. We're going to cover a home buying strategy using consumer bridge loan financing that provides a competitive edge in our fast-paced real estate market.
Hi, Mark. Thank you for joining us today.
Great to be here.
Tell us about Pacific Private Money and how your company is different from conventional lenders.
Well, at Pacific, we're an alternative real estate finance provider. We're alternative to banks, and we're known as a private money lender. Sometimes we're referred to as hard money. But the biggest difference between us and conventional lenders is that we have amazing flexibility when it comes to decisioning and speed. And that's something that banks don't have. Banks really are limited when it comes to decisioning. They have to make decisions based on numerical inputs, and they can't compete with us on speed. And so that's the difference between us and conventional. But we're also different from most private lenders in that we're one of the few private lenders in California that actually funds consumer bridge loans. Most private lenders stay away from consumer-related lending. They focus on fix and flip and business purpose. But we provide the financing behind a lot of the buy before sell programs, which are really popular now with realtors and with home buyers. So that's the biggest difference.
Okay.
So I've heard the term hard money being used for private lending, right? And that term kind of comes from maybe a different time, so to speak, more on the commercial side. And I'd like to think of it more as easy money compared to going through a conventional lender for unique situations.
Well, the two most important things for most borrowers are flexibility in decisioning and speed. Like I mentioned earlier with banks, thanks to Dodd-Frank or no thanks to Dodd-Frank, you're now really a series of numbers, and those numbers have to line up for them to say yes. And bank financing today often takes anywhere from 30 to 45 days. They're really busy right now. And as we know, we're in a market where real estate transactions are happening very, very quickly if you want to compete, particularly with cash buyers. We have a shortage of inventory and a high demand for housing. So many home buyers, particularly self-employed or people with any kind of difficulty proving their income, what ends up happening is that they find it difficult to get a bank to say yes on a purchase money loan. And so if they want to compete with the rest of the home buyers out there, we're finding more and more people are turning to the private side, the consumer bridge loan, to be able to help them affect and capture that property.
We've seen that in residential real estate where some of our self-employed clients are having challenges getting their loans approved going through conventional lending standards and guidelines set out by Dodd-Frank. And I think what happened also is COVID, the pandemic, actually exacerbated the challenges that self-employed borrowers have, where the underwriting guidelines for conventional lenders were actually more stringent as a result of the pandemic. And that's still with us today. That really hasn't subsided yet.
Well, the Bay Area actually has a higher percentage of self-employed and 1099 contract employees than pretty much any other part of the country. So really here, more than any other area, there's a need for an alternative way for a home buyer, prospective home buyer, to buy their home. And so that consumer purpose bridge loan that we've been doing now for almost 10 years now, since the advent of Dodd-Frank, has been a tool for realtors to help their home buyers, particularly self-employed, capture that next home.
Mm-hmm.
Well, you spoke about it earlier, but there's a shortage of available housing for sale in the markets all across the country. One primary reason for the scarcity of homes for sale is many homeowners are unwilling to sell their current homes without being confident that they can secure their next home.
Well, and so where that really shows up a lot is, so someone decides to move. They want to move up. They want to move down. They want to move to another town. They go to their bank or mortgage broker and they say, great, sell your home first and we'll give you a purchase money loan on the next one. Well, the problem is you put your home on the market today and it sells in 5 minutes. What are you going to do? Now you're homeless, right? Do you want to put your stuff in storage and move into an apartment? I mean, that's just silly. So we have a tool with the consumer bridge loan that allow you to buy first, sell later. And you guys at Compass, you're very familiar with that. You guys are one of the leading advocates and proponents of buy before sell programs. You've had this now for a couple of years. And we've been very appreciative. We worked with a lot of Compass agents in the Bay Area who understand how important and powerful the ability to buy before sell is. And so now we have a financing tool that can provide up to 100% financing on the purchase of a target property. And that allows them to move straight in from their existing home to their next home and then go back and freshen up the property, remodel if necessary, and stage it, sell it for a higher price. And that oftentimes, more often than not, we've found in our business over the last couple of years, our clients who take advantage of our consumer loan program, they actually make more money. It pays for itself because they go back and they make more money selling their home empty, freshened up, and staged. And as you guys at Compass, you're able to provide your clients oftentimes with the money to help them fix up and stage and sell their home for a higher price. So it's a real win-win.
Right.
Yeah, so many homeowners who want to sell are really in a holding pattern, feeling stuck because their lender, their conventional lender, they're telling them that they have to sell their home first so that they can qualify for the next house. And there's a lot of press about housing shortages being caused by lack of supply because of lack of new construction. But there is an overarching problem here of existing housing being available to buy because people aren't willing to let go of what they have until they know they can get what they want when they buy. So homeowners are choosing to stay in their homes. They believe that they're not going to be able to compete with buyers who do not have a home sale contingency or have all cash to purchase a home.
Well, and you've probably seen the reports. I think 6 months ago in the national media, there was an article that essentially blamed boomers for the lack of inventory because they're refusing to move. The average stay has gone from 5 years to like 13 years. And what wasn't said in that article, and I feel very strongly about this, and you mentioned that, is I think a significant percentage of people who want to move feel trapped in their home for that very reason. They've gone to the bank says you gotta sell first. You don't qualify for 2 mortgages. Again, that's an effect of Dodd-Frank. Dodd-Frank created certain ratios and numbers that make it very difficult for someone to have 2 mortgages at the same time, even if they make good money. And so we find a lot of clients are shocked when they learn that even if they have the down payment and they go, well, I'll just go ahead and put a down payment and get another loan, buy my next home, move in, and then I'll sell it afterwards. I mean, they have that same idea of buying first and selling second, but their bank tells them, I'm sorry, you don't qualify for 2 home mortgages. So we get around that fact. We help them with a bridge loan because we don't have those same conditions. We have flexibility. We're really looking at what's the story? How are you going to pay us back? So we have flexibility with respect to decisioning where we can go, okay, we understand why you need this loan, and we understand how you're going to pay us back. You've got a conventional mortgage broker who says, hey, these guys are golden. As soon as they sell their other home, we'll be able to refinance them conventionally. So more and more what home buyers are finding is that they can turn to alternative products like a consumer bridge loan to help them capture that next property. And so for us, our challenge is educating real estate agents to say, look, it's not hard money like you remember 20 years ago. This is not, we're not loan sharks. And the cost is actually quite a bit less than it used to. It's still more than bank financing, but it's quite a bit less than you might think. And like I mentioned earlier, more often than not, it pays for itself because you move straight into your home. There's no storage, there's no renting, there's less stress. I mean, put a cost to that, right? And so it's really a way for people to get out of their existing home. And so for agents like yourselves, more and more are discovering that they don't have to feel uncomfortable about recommending this. I mean, it's a tool. We're not cramming these loans down anybody's throats. It's like, look, here's an option for you to be able to move now. And the number of people who, once they learn about this, how appreciative they are. And so it's really powerful for real estate agents to be able to go, okay, who do you know in your book of business and your client list? How many clients have you run across that want to move, need to move, and feeling trapped? If you can identify those, you can increase the number of commissions you make. You may be able to make more than one commission because now you can help them move to their next home and help them sell their existing home. So it's close more deals, land more listings, be a hero to your client.
Right.
How great is that?
Yeah, that is good. Yeah.
So as you said earlier, selling your home first without knowing where you're moving creates anxiety in the home buying process, especially when the supply of homes for sale is so limited. In our competitive real estate market, any contingencies in your purchase offer signals a risk to the seller, especially if the contingency is related to the sale of your current home.
Yeah, and most sellers will not accept a purchase offer if there's a contingency for selling another property. And one primary reason for that is the home sale contingency will impact that seller's ability to buy their next home, because now you have a chain of home sale contingencies linked to their purchase offer. So most sellers aren't going to get behind that.
Absolutely. And so why the bridge loan is so important and so useful and so flexible is that the more as a realtor you understand how flexible and powerful it can be, the more you realize how many people you can help. So for example, not only is it a tool to move directly into your next home, but because we can approve the loan, now as a realtor representing your client, you can make a cash-like offer. Now, some people will go ahead and make a cash offer, which we don't recommend because it's not a cash offer. There is financing attached to it, but you can mimic a cash offer by having low or no contingencies and a quick close. So for example, the consumer bridge loan, like most bank loans, there are certain requirements for waiting guidelines, and so the traditional speed for how long it takes to close a bridge loan is about 21 days. But we also help people who have fallen out of conventional financing. They're in contract to buy. They have a deposit that's gone non-refundable. Now what are you going to do? So in that situation, we have the ability to waive what they call the TRID waiting guidelines of basically 10 to 13 days, and we can go straight to close.
That's amazing because most conventional lenders cannot waive that TRID timeline, and that can kill you.
Yeah, so make cash-like offers.
Right.
In an emergency, if your client is about to lose their deposit and fall out of escrow, or if it's taking too long to get bank financing, the seller's going, hey guys, I'm not going to grant you another extension. I've got a backup offer for $50,000 more, so I'm just going to keep your deposit and sell. We come in, we can save the day. If there's a financial emergency, we have the ability to waive the waiting periods. And I don't like to say this, but we have closed in 3 days. I mean, that's pretty quick. You get a call on Monday and say, if we don't close by Friday, the seller is going to keep our client's $100,000 deposit. But when those fire drills happen, we can push that loan to the front of the queue and make it happen.
Great.
Yeah.
So I wanted to clarify something you said earlier, that even if a seller would qualify for two mortgages, essentially a whole new mortgage for the home that they want to buy, including their current mortgage, are you saying that banks are often not allowed to make that happen, even though they make enough money, the consumer does?
So there's something called a DTI ratio, a debt to income ratio.
Yeah.
And for conventional financing, if it's above 43%, which seems like a random number, and I'm sure it was something that was negotiated back in the day when they passed Dodd-Frank 10 years ago. But due to DTI ratios, even if they make good money, they have to analyze each loan with these ratios, back end, front end. I mean, it gets really down in the dirt and not something we're going to get too deep into in this session here. But it's surprising to many home buyers who believe they're making plenty of money and they've got cash reserves, but they're told, no, your DTI ratios are 45, not 43, and we don't have any flexibility. I mean, it's banks and conventional lenders, when they close a loan with you, they're going to sell that loan. Most are
Right.
not portfolio lenders. And so when they sell the loan on Wall Street, it has to fit within a very specific box. So again, you're a set of numbers, and those numbers all have to line up perfectly. So more often than not, what happens with home buyers is their DTI ratios just don't quite fit under
Okay.
that 43% maximum. And that's when they find out
Yeah.
that they're not, they can't have two home mortgages at the same time. They don't quite qualify.
Okay. So, Pete, I know we talked about it before already, but what are some of the advantages of benefits of buying before selling?
Well, in this market, a seller's market, you basically have to win the house, meaning you are competing with
Absolutely.
stiff competition with buyers that have all cash, no house to sell, no contingencies at all in their offer whatsoever. So it gets you into that playing field. There's no contingency for the sale of your home, which is huge. And you know where you're moving and how soon you can take possession of your home. It takes the anxiety out of, hey, if I let go of what I have, where am I going to go and what does that look like? Also, you can time the sale of your current home to avoid the hassle and cost of making that double move into interim rental housing, which nobody wants to do. So Mark, how does one know if a bridge loan is right for them?
Well, certainly if you're self-employed and your bank tells you, look, we think we can get you a loan, but it's going to take some time. Now, I'm actually a good example. The last two homes I purchased, I used private money to buy the home. Now, I own my own business, I make good money, got a high credit score, but because I'm self-employed and because my income, you have to analyze financial statements, et cetera, it's not what the banks are accustomed to look at. Bank financing works best if you're a W-2 employee.
Right.
Things are very, very simple tax return, not a lot of extraneous assets, et cetera. So for those of us that have a little bit more complicated financial situation, or we're just, again, self-employed, 1099 employee, this is a tool that will help you compete with cash buyers. And so really the difference is if you need it, want it, and can benefit from it, we want to make you that loan. Now, there are some challenges, and let's talk a little bit about that. You mentioned it earlier. You have a large loan, 100% financing we can offer you if you don't have any of the down payment, but you've got equity in your existing home. We can make you a loan equal to 100% of the purchase price and use your existing home as equity, because we don't do technically 100% financing. We solve for about a 70 to 75% combined loan to value. And the way the math typically works is that if you've got about 50% equity in your existing home, you can generally qualify for us to do a bridge loan equal to 100% of the purchase price. Again, if you need 100% because maybe all of your wealth or your equity is tied up. So the downside is it can be expensive. You've still got the first mortgage on your existing home, and now you've got a large mortgage, 100% of the next one. So it helps if there are opportunities, if you've got the cash or the income where you can make those monthly payments. Now there are some programs that we can do where the payments are taken care of. In fact, you guys at Compass, don't you have a program where
Yes.
the payments you can help the borrower make the
Right.
payment, so it eases the transition between
Yes.
moving into their next home and then how long does it take to sell their existing home.
First, they get the loan through you, for example,
Yes.
Pacific Private Money. And then when they're approved for the loan, then they apply through Notable Finance, which is through Compass, for getting the first 6 months of the bridge loan payments covered or fronted via the Bridge Loan Advance Program from Compass. And then once you have that in place, then you can begin your search for your next home with your Compass agent. And when you find the right home, you use your approved bridge loan to bid on a new home without a contingency to sell your current home.
Right.
Once you move into your new home, your Compass agent helps you to sell your current home. And when your former home sells, you use the proceeds to pay back the bridge loan payment advance, and the concierge improvement loan. So
Yeah,
it's kind of a package deal.
Right. So who is eligible for the bridge loan advance program?
Well, anybody who works with a Compass agent.
Okay.
We find that the average borrower, the average client for our consumer bridge loan, pays off the loan anywhere from 30 to 90 days. The great part about our loan is that there's no prepayment penalty. So you're literally renting the money for
Right.
whatever time period you need. And in this market today, as soon as you can close escrow, right, with your new home, the clock starts ticking. You're paying for our bridge loan for whether it's 100% or 90 or 80, whatever that number is that you need. You begin paying for it basically on a per diem basis. So, for example, our loans could be anywhere from 7 to 9%, depending on a number of situations that we're going to analyze. Everything from credit score to how many properties are involved, et cetera. What's the story? We look at a number of subjective things, and that seems like a lot, but almost nobody. Let's just say we write the loan for 8%. It's an 11-month bridge loan. It has to be less than a year to qualify for the exemption, so we can do this type of loan. But it's 8% for the whole year. Nobody pays 8% if they sell your property right away. So generally speaking, how it usually gets paid back is, so let's just say we're lending you $1 million to buy $1 million home. You've got an existing home that has equity, and we're able to tie up that property. When you go back and sell your former home, we will apply some of those sale proceeds to pay down our loan. The rest you will conventionally refi. So it generally gets paid off in 2 tranches.
Right.
And so the first tranche pays it down as much as you want to pay it down.
Okay.
That helps reduce the cost of the loan.
Okay.
And then your mortgage broker will help you conventionally refinance. And how long that takes really depends on your particular financial situation.
Right. So you're not paying 8% for the whole entire year necessarily.
Right, so there's no prepayment penalty, right?
Yeah.
So if you only need our money for 30, 60, 90 days, then you're paying an annualized rate of 8%, but it just sounds more expensive than it really is.
Yeah.
So Leslie, what does the bridge loan advance cover?
The advance can equal up to 6 months of monthly bridge loan payments and eligible closing costs incurred from the bridge loan. Eligible closing costs include the dollar value of any loan fees or points paid up front, origination or application fees where applicable, and appraisal fees. So Pete, what if a home requires renovations or other work before offering it for sale?
Well, Compass provides access for our clients to a home improvement loan to sell your home faster and for more money. If you're approved for the concierge home loan, it has a 0% APR for the life of the loan, and there are no additional loan or closing fees. So whether you're using the improvement loan to increase your home's value or you're making the improvements with cash, it's easier to have the construction work done after you've moved out of the house.
A bridge loan can help you sell your former home faster because you have moved into your new home while repairs and improvements are being completed.
Yeah, so when your former home sells, you use the proceeds to pay back the concierge home improvement loan. And so there's a way to be strategic with this. So if you're going to go down this path, the way I would do this is I would have the home that you want to sell all ready to go. Do all the improvement work, the repairs, get it ready to go. So when the time is right to sell it, you're not trying to do this later. You can do it that way, but if you want to shorten the curve and the cost of renting the money, as you say, front load it, get the house ready to go if you can, if you're in that position, and use this interest-free loan through Compass for that reason. You have up to 12 months to pay back that Compass concierge loan, so you have time and there's no cost. It's just simply a deduction from your sale proceeds at close of escrow. And then go out, apply for the bridge loan, get that approved, get the bridge advance loan in place, and then go out, look for that house once you're in escrow to close the sale on the new house. You start to queue up the other house and get it ready to go. So right after you close and move out, that house is on the market. In this market, you can have offers within a week or less, multiple offers in most cases, and really shorten and compress the amount of time that you're renting money to reduce the cost of the financing.
Right. Mark, what are some other ways a consumer bridge loan can be used to help purchase a primary residence?
There's actually a number of ways. So for example, divorcing couples. We've helped many divorcing couples buy the second home for one of the two to move into while they're still working out the divorce. Because as you'll find, again, with bank financing, They won't provide financing until the divorce is final. Another situation might be probate. Parents die, there's a home, one of the siblings wants to keep it, the rest want to sell it. We can provide financing to help in that situation. But the most prominent and the most probably the most popular way that they use our bridge loan is just all the different situations and nuances that people are in that limit their ability and opportunity to move from their current home. And that's really the biggest one.
Okay. What else should borrowers consider when exploring bridge loan financing? I know you talked about the cost. What else?
So we're pretty good at working with clients to help assess that they're not going to get stuck in our loan. That the last thing we want is for someone to be paying our rate of interest longer than they need to.
Right.
We've had very, very few, out of the several hundred bridge loans we've done in the last couple of years, we've had very few people go the entire term.
Right.
If they do go the entire term, we can extend. It's not a hard balloon. We have the ability to extend. The good news is we don't charge extra fees for extending. We're actually not allowed to, so we don't. But very few people have found themselves in that situation given the market that we are in now. But again, we're really good at making sure we don't want to do harm to a client. It's got to they have to need it, want it, and benefit from it.
Right.
And we've got a really good track record of being able to analyze our individual client situation. I mean, most people have a fairly similar situation. It's just, they're not able to get a bank loan to buy their next home, and they don't want to sell first. But we also are pretty good at looking at, everyone's individual situation. Maybe they've got a credit blip that they're going to repair within the next few months, but they have an opportunity to buy now. That's a good situation to use a bridge loan. Maybe their income is going up soon, or they've got stock options that are vesting. A bank will make you wait until that happens. In fact, they may even wait till that happens and you have 6 months or a year of that new income.
Right.
We can make a loan based on forward income. We have that opportunity. So again, we have amazing flexibility when it comes to that. So really, we just want to make sure that within a reasonable period of time, less than 11 months, you have the opportunity to conventionally refinance whatever your situation might be and pay off our loan. Again, it's got to be a benefit.
Okay, interesting.
Yeah. Well, Mark, thank you for sharing this valuable information. Mark's with Pacific Private Money. And so, Mark, what's the best number to reach you?
So, well, our website's pacificprivatemoney.com. We've got information on our bridge loan program there. We're here in the Bay Area at 415-883-2150, and we answer the phone with live people. So feel free to call us, and you won't have to go through voicemail hell, and we'll set you up with one of our many experienced loan agents who will be able to talk to you about your situation and tell you whether a bridge loan will be right for you.
That's great.
Great. Thanks, Mark, for joining us. I'm Leslie Whitney.
And I'm Pete Sabine. To find out more about our real estate services and our expertise, go to our5starteam.com.
Listen to our Real Estate Pro Tips podcast. You can find our podcast on Spotify at realestateprotips.podbean.com.